Our next panel discussion, join us for an inspiring panel discussion titled MSME Mavericks, Fueling the Dream of India's 5 trillion economy. Explore how MSMEs are embracing innovation and adopting new technologies to drive economic growth. Delve into the various government initiatives and support mechanisms aimed at empowering SMMEs. Gain insights into significant contributions of SMMEs to India's GDP and their future prospects in shaping the economy. For this session, I would like to call on stage Arindam Das, CEO and Consumer Credit and MSMEs Loan, DMI Finance, Nabindu Das, Chief of Engineering and Lead, Financial Services, Tally Solution, Deepak Jain, Co-founder Flexi Loans, Amit Sachdev, COO, MI Exchange, Vikrant Kulkarni, Principal Consultant, The Digital Fifth.
Sure, yeah. Yeah, thank you everyone. Thank you for joining in. So we have today very interesting panel on the MSME. So MSME is one of the key component of Indian economy. I mean, for the numbers, they have been called as a 65.3 million, but I feel the way they are boosting up the part of India, which is essentially the regional India per se, is phenomenal, right? I mean, they have been largely, not I would say that credit dependent, but at least they were at some point of time, MSMEs were a little bit away from the credit. I mean, they had to struggle a lot, but owing to the entrance of new players as well as revamp of the players as well as fintechs, they have enabled them to take the credit even at, unsecured business loans largely today work on the just a tap of some clicks, right? So that journey has been evolved much, so which essentially will take the future also very promising. So we are fortunate to have such a diversified panel which will be able to guide us on how this future will look like for them from the perspective of lenders, from the perspective of technology, and from the perspective of overall economical growth per se. So starting with you, Arindamji, would like to understand from you, like, as I said, the journeys for the MSMEs lending per se have been simplified with the larger uses of digital public infrastructures. And how do you see that growth is coming up and how it is going to get simplified more for the MSMEs?
Sure. Thanks a lot and very good afternoon to all of you. I know the post-lunch session are usually a little soporific, so we'd like to keep it short and give you a coffee break very soon. Thanks for asking the question about, in a way, it is a very simple problem to solve. At least sitting here at our vantage point. So I'll like to answer, make it very simple without over-intellectualizing this piece. So let's say 15 years back or 20 years back, people who were doing MSME lending, most of us bankers were doing MSME lending, where we used to go and meet the proprietor or the partner at his shop or at his business, meet up at his residence and office and ask him questions ad nauseum about his business targets, about business volumes, inventory, look at his P&L, look at his bank statement, ask him tricky questions. We used to go back. Somebody from credit used to ask the same questions, and then we used to give him an offer. Then operations probably would have reached out, hey, this document is missing, that document is missing, and we used to do whatever we could do. And let's say most of the banks and NBFCs at that point of time, early 2000 and mid of 2000, was doing thousands of crores of disbursal over a period of time. MSME lending, both on the secured and unsecured, was largely run like that. Even today, large part of secured lending in MSME, which is LAP or plant and machineries, is run like that. Then came a bunch of interesting ideas thanks to the public infrastructure which was getting built on the digitization and the digitalization rails, and very interesting use cases which are coming up thanks to iSpread, thanks to MITI, thanks to the Commerce Ministry, thanks to RBI, the account aggregator framework has come. So what has happened is lenders like ourselves, which is DMI, where we only do digital, where we only try to lend where we can programmatically underwrite the loan and not go to his customer's residence or office and ask him this 1,000 question or 20 pages. We don't know. So we rely very heavily on that digital infra. So that digital infra is doing what? That digital infra is helping us to consume the data without any unreliable third party. We don't have to depend on a DSA, or we don't have to depend upon some FOS, or we don't have to depend upon some branch. The information is coming directly into the system, and then we are consuming it. And of course, if that is feeding into the model, it will go into the model to spit out something, right? A score, a band, a yes, yes, but with these conditions, so on and so forth. So that is making our life very easy. Has it rapidly changed? I would not say it has rapidly changed, but any change which has happened, it has never happened rapidly. We have seen the journey of UIDI, we have seen the journey of UPI. When it started, it starts with about few million transaction, couple of billion here and there, but when it snowballs, it is massive, right? Today, I don't know how many fintechs are there or how many prime time banks and NBFCs are doing most of their KYC without the Aadhaar stack. I think most of them. Some fintechs are 100%, some NBFCs are 100%, somebody is 50%, most banks will be probably even higher, right? Why banks and NBFCs? Even telcos and other companies like maybe wealth companies or mutual fund. Same story with UPI. I don't know the last figure. I think in January they would have definitely crossed $225 billion of total value of transaction. And a lot of them are not only P2P, a lot of them are P2M. So we were just discussing, outside the panel with Novindu, that how we can use something which is a very utility value, which is a software providing accounting to the traditional proprietors and businessmen in India, how we can repurpose it to consume data for lenders like us and probably offer an embedded micro and small business loan for its purpose.
Sure. Yep. Thank you. Thank you very much. So one of the prominent factor of MSMEs, as we all know, is largely the financials are connecting to the payments and the lending perspective. So from that perspective, would like to ask Mr. Nabindu, working with so closely with MSMEs, how do you see they are adapting to this new digital product and how they are basically factoring for the growth of their own using these payments and lending products?
Yeah, so as you correctly said, Vikrant, we have been serving the MSME segment. As a company, we have been serving the MSME segment for a very long time. And in the last few years, we have seen phenomenal increase in digitization. You see increase in digitization of business software, business processes that they have. But more to the topic of this discussion, you see a lot of increase in digital adoption of access to financial services. So you're looking at digital onboarding, you was talking about the KYC, the payments, collections, lending, open banking, and so on. And if you see, a lot of work has actually happened in these areas, but the tremendous growth that is coming in front of us, which is part of the 5 trillion promise, there are a lot of opportunities that is there in front of us. And I will pick up one where, I have been closely working on, which is embedded finance. Like as we have all seen, that there is increased embedding of financial services. I think Arindam mentioned it a little bit. Financial services as part of some digital product that the business already uses. And you can see a lot of benefits out of it. One is, of course, you are trying to access a financial service and you don't need to use yet another software to access that. That's like makes it super easy. And then, of course, you look at the distribution cost. As we go forward, and I was talking to both Deepak and Arindam before this, and we were talking about how can you make these processes more digital. And the more digital it becomes, that's how the distribution costs go down drastically. Right? So, and third is, of course, now we have access to this rich data. And the question is, how would you draw, key insights for them? So if you look at credit, that this is giving you ease of access to the kind of credit product that you really need. It's making it easy for the credit analysts because now you have access to this rich data which is there in the core digital product that the business is using. So now they can actually look at intelligent modeling techniques for assessment of loans. Then, the other thing to look at is open banking. When you look at API banking, and API banking, usage of API banking through embedded finance is a really big deal. I mean, imagine creating an invoice in your ERP system if you're running a business, which could be either on the payable side or in the receivable side. And think of the convenience that you can initiate the payment process or the collection process right from then and there. So there are lots such potential opportunities are there ahead of us. And in Tally, we are working on building some such, embedded journeys right now. And I do feel that many of these will be a big help to the businesses' lives.
Sure. Thank you very much. So as we were talking about the journeys for the digital loans would be simplified, and those are to be more digital towards the nature. So my question would be to you, Mr. Deepak, like how do you visualize these digital journeys are going to help the MSMEs? And I mean, being one of the adopter of such digital journeys, how you are envisioning the future of these simplified journeys which are digitally enabled?
Thanks, Vikrant, and congratulations to the entire Digital Fifth team for a fantastic conference. So, see, we at FlexiLoans, we call it the RPU model. When you want to do things differently, like when we started FlexiLoans back in 2016, we were clear about two things, that we would do loans across the country and we would not open branches. So then how do you do it, right? You don't want to open branches, you don't want to deploy feet on street, either of your own or the DSA agents. Then how do you acquire customers? How do you ensure that there is reach, R? How do you process digitally? And how do you underwrite? These are the three pillars on how digital lending will happen. As far as reach is concerned, I've seen in last 7 years, like significant shifts have happened. The way MSMEs interact or MSMEs have started coming to take loans. Initially, it was a lot through the B2B2B. And we had to, as a lender, we had to go and convince a lot of ecosystems like Tally to start lending, to enable lending on that ecosystem itself. It was obviously every brand had its experience, its reputation in the market, and they didn't want, or they wanted to ensure that, they're not compromising on their main product to enable lending. There are a lot of advantages of embedding lending into almost every product you see. Today, everybody wants to do it. Back in 16, 17, it was very difficult to educate people to go out and try this. Second big change as far as reach is concerned is the MSMEs are now, like thanks to Jio and the cheaper smartphones coming from, China or Chinese-led enterprises. What's happening is everybody, even in tier 2, tier 3 town, every entrepreneur of small size also has a decent smartphone. And they are able to, see the ads on social media. So you'll be surprised. We get so many ads from social media route. We get almost 300 to 400,000 leads coming our way by clicking not on Google, but clicking on, some other forms of social media. So entrepreneurs are more willing to apply it in a digital manner. So that's one thing which has changed significantly. As far as the assessment is concerned, again, luckily the Indian government and various agencies are thinking way ahead of the time of the global financial rails, I would say. So we have come a long way. We used to do, the KYCs were all physical when we started back then, because as an NBFC, you had to be compliant, so you had to do an OSV. With VSIP, now been an accepted form of KYC, and great adoption of that. Almost 70% of the customers, 65 to 70% of the customers are ensuring that they come via VSIP. So that rail has changed significantly. eNASH is another great rail, because otherwise collecting checks or ensuring you get a physical NASH and that gets activated in 30 days. It used to take 45 days, sometimes even 3 months to get those NASH activated in back in 16, 17. And Arindam would know even earlier from his banking days. So it was such a long period of time. It's now changed to real time. So that those rails are changing, and I can go on and on and on. But so many different rails have emerged, which is allowing lenders like Flexi Loans to go out and lend in almost. So we today lend in almost 15,000 plus PIN codes, and almost 75% of our loans. When we have only one office here in Bombay, almost 75% of our loans are in tier 2, tier 3 town. It's happening because of this digital reach as well as digital assessment methods. Obviously, you overlay with a lot of data-backed underwriting, and you ensure that you are playing a long game versus a game of growth only.
Thank you. Thanks. Amit, I would like to understand from you, like we talked about the technology and digitization and the reach perspective, but somehow these changes have also evolved the business models. So how do you see these business models are getting evolved, and how are the maximum affordable credit will be coming up to the MSMEs in near future?
Sure, Vikrant. So before I answer your specific question, just some perspectives on the fantastic topic you've chosen, the 5 trillion economy and what MSMEs can do. Just to put things in perspective, sometimes the numbers help us put things in perspective. So we all know, and what is talked about is MSMEs contribute X percentage of India's GDP, which is 30%, X percentage to exports, which is 50%, and 30% of GDP, just 3.5 trillion, is almost 1 trillion. So that's a contribution by MSMEs. That's something which I'm sure the entire hall knows. What is not talked about, and what a lot of us may not be familiar with, is what can this sector do? Now, the total credit gap for MSMEs in the country is about $800 billion. And 20 years back, when I started my career, it used to be 100 billion. Over 20 years now, it's grown to almost 8 times $800 billion. If we could find a solution to bridging this gap, each rupee of capital given to SMEs results in a 1.5 multiplier at the very, very conservative estimate. That's a study shown across the world, including US and Europe as well. What that could do is create additional economy of almost 1.2 to 1.5 trillion dollars. Now, out of the additional 1.5 trillion we have to create, if potentially in a year we have a solution to this credit gap, we could create the entire additional economy just by MSMEs. That's a value, that's a significance, and that's why I think a wonderful topic chosen for this session. Now, what is important is how do we bridge that gap, and that's important. And a lot of things the fellow panelists have spoken about already on the whole digital public infrastructure, which is huge enablers, and I think a lot of work has happened already. But to me, the how has 2 parts, 2 core problems, because for some reason, the banking industry has not been able to bridge the gap fully. Now, let's understand why, and which is where I will come to your question as well. At the core of the problem, why the gap exists, is SMEs are not large corporates, right? They are not as formal, they are not as organized, and hence the models, the business models that apply when you're looking at a corporate customer, how do you lend to him, are not applicable for MSMEs. Right? That's at the core of the problem, number one. Number two is the ticket sizes for MSMEs is a fraction of the ticket sizes for a large corporate. If a large corporate, you will give 1,000 crore loan, you will possibly give a 1 crore loan to an MSME, it's 1,000. And hence, the technology becomes a big enabler. For a variety of reasons, the Indian banks have not been able to solve for these 2 challenges. I think to some extent they have, to a large extent they're not. And hence, whatever solution we look at as a business model, operating model, has to solve for these 2 core problems. Which is where 2 things are very, very exciting as we look at it. Number one is the whole digital public infrastructure we spoke about, and the formalization. And again, some numbers help us put things in right perspective. Till not many years back, till 2014, 15, 16, the number of formal MSMEs was few lakhs. It was less than 10 lakhs. Today, the number is a staggering 3.5 crore, 35 million, right? That's the amount of work which has gone in ensuring that the MSMEs are ready, more formally, more organized, more structured, and hence more credit flow can happen. And that's fantastic work which has happened in the government. And we all need to thank the whole government and the whole ecosystem for enabling this formalization. That's one. Second is the challenges that banks deal with in innovating because of their processes, structures. There is fintechs. And hence, what is important is this, this partnership between the banks, which have huge strengths in distribution, strengths in lower cost of capital, and the fintechs which can innovate at a much, much faster speed. Amazing session before this, Shashank spoke about the whole agility. Right? That brings innovation, which is where fintechs come in, tech capabilities. Now this combination, this partnership is the solution to solving that $800 billion gap. Now, what operating model will enable this is a question. Multiple models exist, co-origination exists. Pure FLDG based model is where the whole fintech story started way back in 2015, 16. And now there is a very interesting model of trades. One of the really big models which has scaled up in the right partnership is TRADS Trades, which is enabling almost 15,000 crore of financing each month in partnership with 60 banks. And again, that's another example of the whole digital public infrastructure. Fantastic concept, thought through very well by RBI, and that's channelizing huge flow. So this is the operating model that multiple models have to be thought through, and the right model will hopefully scale up. But to me, this is a question. And second, of course, is the whole risk. How do you look at the risk of MSME, which is where, again, this digital public infra with account aggregators enabling access to bank statements, to GSTs, to the CIBIL, will be the second big lever that will hopefully help us solve this huge problem and enable the $5 trillion economy.
Sure, thank you. So, Arindraji, would like to understand from you, like, I mean, there are a lot of MSMEs are been seen in different segments, and MSMEs which may not have the traditional history or may not have the proper bank statement, etc. From that perspective, we talked about using data of account aggregator, etc. But from the alternate data perspective, how do you see that is being used for the underwriting? Because that is one of the major aspect which will enable it.
Okay, this one, to whatever we have seen at our lending entity, this is little difficult because let's say one way to underwrite the proprietor is looking at is some business lead indicators, and some of them are lagged indicators. Number of customer flows, which probably is a proxy of how many UPI transactions he may be or she may be doing. What part of his cash flows are coming in, which can be seen from some kind of a POS versus what is not visible at all, whatever is happening in cash, and we have no way to measure it. Let's say, then there are very weak signals. We have been hearing about it. In past, we have experimented on it, but at this point in time, we are very not very confident to share that we have seen much value of it. Weak signals means like at what point of time the device which the customer is using, let's say this particular person has a sale of, let's say, a couple of lakh rupees a month, her or his income is about 30,000 rupees or 40,000 rupees of income, and he or she is using a mobile phone, and we try to see what signals we can see from that particular phone. Like at battery charging, battery discharging, and all of this, by the way, we have not actively done loans on it. These are all experiments. We have deployed academic research on it, and unfortunately, we have never seen any signal value coming out of it, basis which we can start lending. So our hypothesis till now has been use the account aggregator to look at the banking information, use POS information to look at what kind of UPI transactions or wallet information for velocity, transaction, recency, value, volume, and basis that can we give. And the fourth is, it is not a signal, but it is a use case where we are not dependent on financially underwriting that customer. Think about it. Let's say there is a particular lender, let's say Bajaj. Everybody is very familiar with Bajaj's model. So Bajaj is, let's say, doing a few 100,000 every month of dispersal on their consumer electronics. They sell mobile phones, TV, fridge, whatever it is. Now, they have that merchant who is selling those, let's say, the mobile phones. Basis that data, they are giving that customer a trade advance or so-called inventory funding. And the repayment of that inventory funding is coming from the retail business. So in a way, it is like a type 4 lending in the classic language of how Sharad from iSpirit had explained to us what is type 1, type 2, and type 3, and type 4. Type 4 being the most tight and cash flow visible business, and where whatever you are lending to that customer, he is putting into productive use, and you can see it coming back to your repayment. So this is like a classical type 4 type of lending. There can be examples of, there are companies like Petromoney, I don't know whether they are in this room or in this. So we had heard some interesting use cases from the Petromoney, like they have tied up with petrol pumps and they have the ERP tie up with the distributor, and they know how much of petrol that particular person is selling on a daily, weekly, whatever basis, and they are giving them advance to purchase from the distributor, HP, BP, IOC, whatever it is. And the repayment is coming when you and I are filling up petrol at that particular gas station and then getting the money back. So these are some of these classic examples where you don't have to enter into too much of financial details to look at into his bank statement, P&L, or a balance sheet, and yet you have the ability to give a loan. You have the ability to take the repayment, and probably you can make a decent margin to look at a pretty decent ROE kind of a business. That's what I would like to share.
Sure, thanks. So my question to you, Mr. Nabindu, would be like, looking at the future and the evolving business models which you talked about, the uses of data which Arindamji also mentioned, looking at that, how do you see the technology is getting adopted and going to fuel this growth for the MSMEs in the future?
Yeah, I mean, there are just so many things. But I can mention a few. I think one very, very important thing today is the expanding ecosystem of the API finance. Like most financial institutions are expanding, their API footprints. And as a result, you see these new channels for connected banking, connected financial services, connected compliance. They are all taking foothold. So that's one. The second one is, of course, the most common one, I would say, the digital public goods, whether it is Aadhaar, UPI, account aggregator. So these things have completely changed our spectrum and put India, much ahead of most other developing countries, I would say, in this aspect. And the third thing that I feel is very, very important is the availability of aggregated data. So you today have the credit reports, the account aggregator frame, and today, and especially with related to my work, about the connected business software that the businesses use. I mean, it just takes the capability of data-driven decisioning to a wholly new level. And in fact, in Tally, I just wanted to mention that we are doing a few things in lines of these to make MSME's life easier. That's what we do. One is we are building a connected world. So as a user of our business software, you will be connected to any, almost I would say, almost any financial institute that you work with, be it the tax system, the banking system, the e-commerce marketplaces, and so on. And this basic capability of making sure that your data is permanently reconciled, let's say to your bank, just brings this tremendous convenience and simplicity in your operations. Or it even brings significant peace of mind of staying compliant with regulatory frameworks like GST, like TDS, and so on, so that you don't miss anything that you need to do to be compliant with the regulatory framework. Overall, there is tremendous, peace of mind. So that's one. The second thing that we are doing is in the space of embedded finance. So we are doing this Tally Capital, which is our financial services arm. We're working with some of our lending partners. We are doing the smart banking suite, where if you are using this software, you stay connected to any bank where your money lies. And then we are doing the account aggregator play in Tally Edge. Overall, it allows the customer to be in control of all their data. It allows the customer to seek financial products that, that they are looking for without leaving the most favorite software. And the third, I think, is and very important one is about artificial intelligence. I think no discussion on technology is complete without, talking about AI. And there are so many opportunities. Converting incoming documents to data, it's a big thing. A lot of effort goes into the system doing that, whether it's an invoice, a purchase order, a bank statement, etc. Having an intelligent conversation with your data, or even perform many other complex operations that you need to do on a daily basis. So these are some of the things that I believe the technology can do and make a very, very big difference.
Sure. So Deepak, you would like to understand more from understanding the digital financial landscape for the MSMEs. How these new platforms which are coming up, and the way you are also saying that you have adopted the digitization, is going to help for the long term for having a resilient credit ecosystem for the MSMEs.
So again, going into what Amit said earlier, see what's changing in India in a big manner is the formalization of the whole economy happening in a big manner. And there are multiple reasons why it's happening. People, because of GST or the simplification of how the whole lending works, education that you can claim the interest benefit what you're borrowing from formal channels versus informal channels you cannot claim the interest for the same. All of this is leading to a lot of changed behaviors from the MSMEs also. And what digital fintechs will eventually lead to is ensuring that more and more this, at least the entrepreneurs who are looking to come towards a formal method of doing things, accepting money from UPI or payments, and thus reflecting that in the tax purview of things, they will get more and more loans. That's the biggest task for the digital lenders like us. We have to ensure that if anybody can prove the flows either through the partner ecosystem like Tally data, again immense data available with players like them, or through their own bank statements through account aggregator. Again, account aggregator is such a big game changer, right? So as long as the MSME or the entrepreneur is able to give you those flows in one of the formats, can you do lending in the remotest of the towns in country? I think that is a big task at hand for digital players like us. Obviously, you have to ensure that the customer experience is very good, but you are compliant with not only the regulatory framework but your own underwriting standards. So you have to play a complex task to ensure that you deliver the best experience, yet you are compliant, yet you are ensuring that you are underwriting the right people, and you're not going out of task there. Second thing which, I think this will all lead to is a massive employment in these tier 2, tier 3 towns. So, and that's the impact or vision which all of us, it drives significantly to many of us in firms like Flexi Loans. That, okay, what's the impact you're creating? You're doing a boring job of coming, acquiring customers, underwriting them and giving a loan. But what's the eventual impact of that? When you see the numbers, at the end of the year or end of a quarter that, okay, you gave loans in these remote towns and there are towns where the entire population of the town is less than 100,000 people, but you've given loans there. And when you go and meet that entrepreneur, you get to know that because of your loan, they could open one more shop and hire 4 more people. And that's the real impact on job, on multiplier of 1.5, the way Amit said. That's something which drives fintech players like us in a big manner. And that's the reason why some of us left what we were doing to catch up on this new India and create a massive fintech organization probably in the next few years, catching up on this massive demand of digitized MSMEs in the country.
Sure. So my last question to you, Amit ji, would be from the perspective of, we talked a bit about the underwriting, but how does what are the trends you see coming up into the credit risk management per se in the MSME lending?
Yeah, I think that's the core of the problem, and let me spend some time on this. So the few things which at least we have seen change between 2015-16 from the point when a lot of us started this dream of fintech to now is because of increased formalization, the cash component has come down a lot. There used to be businesses, wholesale trading businesses, which used to have 80% cash, 20% in black. Now it's the other way around now, where the cash has come down from 80% to 20%. So that's the amount of formalization has happened, which is helping MSMEs build businesses, solid businesses based on solid foundations. That is building credibility among the risk teams, underwriting teams to look at their numbers more credibly. That's number one. Number two, what's really happening is the alternate models of looking at risk. Leave out financials if they don't have credibility, but the acceptance of the alternate data, the GST data, the bank statement data. CIBIL, of course, was always very credible, was being used, but very shallow. What is happening is the underwriting teams are really accepting them as the primary source of data and not what used to be called as alternate data, because this is real data for MSME. Financials, which was being talked about as a primary data, always has low credibility. So this is emerging as the primary source of data for risk teams to take the right calls on. That's second change. The third change is, again, the whole digital public infrastructure, the account aggregators are really emerging. That what has to happen, this is all work in process. What has to happen is, for it to get real full acceptance, the DPI has to really evolve. Account aggregator today, for example, only allows access to an individual's bank statement. That to just one time. So now, if I am a company, I am a partnership, then no one can access this through an account aggregator framework. So there's a lot of work that has to happen to ensure that even that can be enabled. We know that there will be light in the end of tunnel. This has been talked about for quite a few years now. Hopefully, sometime soon we'll have the answer to that. That's one. Similarly, the whole MSME game is not about one-time underwriting. It is also about early warning signals. Before something goes wrong with the intrinsic business model of MSME, how can the banks, lenders take the right calls to cut down the exposure, which is where the EWS comes in. Again, that requires a constant recurring access to the same data streams, the same bank statements, the same GST, the same CIBIL. Today, that is a challenge. And hence, once you're given a loan to MSME, now one cannot go to the MSME saying, now I need access to your data every month. Please give me access. He will not give that access. So it has to be taken at the time of giving him that facility, and hence a one-time consent to give access to his bank statement, GST, and CIBIL is required today, which is not available. So there is a lot of work which is yet to happen, but again, a lot of work has happened. Just to talk about some of the trends that have evolved over the last 10 years now.
Sure. Thank you. Thanks a lot. There are a lot of things in the mind and a lot of things to be, learn from you from the perspective of MSMEs, but time is the limit. Maybe not now, we'll catch up again later to discuss on these things. And I really thank you, all of you, to be here and sharing your thoughts and giving us time to share your experiences as well. And we couldn't pick up any questions from the audience today because of time, but we'll definitely try to, if you have something to catch up, we can catch up outside as well. So thank you for being a wonderful audience. Thanks.
Thank you so much, panelists. Fueling the dream of India's 5 trillion economy, this topic can go on forever, I think. So we will have to cut it short. The discussions can be carried on offline. Thank you, Vikrant Kulkarni, for conducting this session for us. Thank you, gentlemen.